Hello everyone, it's MCQ time. So let's see some MCQs on the very important accounting principles. Okay, so the first MCQ on your computer screen is as follows: fundamental accounting assumption as per accounting standard 1 are your options. So is it option A, going concern, conservatism and accrual, or option B, going concern, matching and consistency, or option C, going concern, consistency and accrual, or option D, going concern, entity and periodicity? Fundamental accounting assumptions are option C is the correct answer. It's going concern, consistency and accrual. Okay, next MCQ. The owner of a company included his personal medical expenses in the company's home income statement. Indicate the principle that is violated. Your options. What happened here? The owner included his personal expenses in the business records. So, which principle gets violated here? Yes, correct answer is the principle of entity. The business entity concept gets violated here. You cannot include your personal transactions. You cannot merge your personal transactions with your business transactions. Okay, so let's move to the next MCQ, a practical one. Cost of machinery is 10 lakhs and installation charges is 1 lakh, right? What do you get from that? If the cost of the machine is rupees 10 lakhs and the installation charges is 1 lakh, this means that the historical cost of the machine is rupees 11 lakhs. And what is the market value? Market value is given to us as 12 lakhs. So you should record the machine at which amount? While finalizing the account, if the company values the machine at 12 lakhs, which concept is violated by the company? You should record the asset at which amount, and what is the amount at which the company has recorded it? So your options are, so did they violate the concept of cost? Did they violate the concept of matching, materiality और periodicity? कौन सा concept तोड़ा गया है? Yes, the correct answer is option A. You should have recorded it at its cost, that is 11 lakh. Instead of that, you are recording it at its market value. So you have violated the principle of cost concept. Alright, let's move to the next MCQ. Omission of paise and showing the round figures in financial statement is based on which principle? Your options. You ignore the paise and you write down the figures at the round figure. कौन से principle पे based है ये? Yes, correct answer is materiality, right? Paise is ignored being immaterial. Okay? Yes. The next MCQ, please. The next one is Konica Enterprises following the written down value method of depreciating machine year after year due to. Now, those who don't know the written down value method of depreciation yet, it is one of the methods of calculating the amount of depreciation. Now, there are various methods of calculating the amount of depreciation. Written down value method is one of them. Okay? So, what you have to understand here is that a company is following just one method every year. It's not changing its method. It is following the same method year after year. So, this is by application of which principle? Your options. Comparability, consistency, convenience, or all of the above. Is it all of the above? No. There is no such principle called as comparability or convenience. So as a result, this is based on the principle of consistency. One of the fundamental accounting assumption that you have to follow the same method year after year. Right? Okay. The next MCQ. Mohan purchased goods for rupees 15 lakhs and sold 4/5 of the goods amounting to rupees 18 lakhs and met expenses amounting to rupees 2,50,000 during the year. During the year 2005, he counted his net profit as rupees 3,50,000. Which of the following concept was followed by him? Okay? यहाँ पे इसने 3.5 लाख रुपए का जो प्रॉफिट कैलकुलेट किया है, कौन से प्रिंसिपल को फॉलो करके, कौन से प्रिंसिपल के मुताबिक इसने 3.5 लाख कैलकुलेट किया है? आपके ऑप्शंस एंटिटी, पीरियोडिसिटी, मैचिंग और कंजर्वेटिज्म. ओके, अब सिंस दिस इज अ प्रैक्टिकल क्वेश्चन, लेट्स एनालाइज इट. एक बार देखते हैं. नाउ वन बाय वन इफ वी सी द डिटेल्स. Purchases was 15 lakhs, correct? Now we know that to calculate the profit, the expenses are compared to the income. So let's compare the expense with the income. What is the income? Sales. Sales is 18 lakhs. But just now we saw कि पूरे के पूरे goods, all the goods were not sold, right? Other expenses were 2,50,000. Now you know that only 4/5 of the goods were sold. So if you calculate 4/5 of 15 lakhs, that comes to 12 lakhs, right? Okay, now just compare that. 18 lakhs minus 12 lakhs minus 2,50,000. What should be the profit? 3,50,000. And what was the profit? 3,50,000. So the company calculated the profit correctly. अब ये जो प्रॉफिट इन्होंने कैलकुलेट किया है, इसमें उन्होंने क्या किया, कौन सा प्रिंसिपल फॉलो किया, क्या आपको नजर आ रहा है? Let's come back to the question now. It's matching, correct? Why matching? Because they didn't compare the whole 100% of the purchase value of the goods with sale value of only 4/5. What they did? They compared the sale value with exactly the cost of that much units that was sold, right? Okay, so that was matching. Next one. A businessman purchased goods for rupees 25 lakhs and sold 80% of such goods during the year ended 31st March 2005. The market value of remaining goods was rupees 4 lakhs. He valued the stock at rupees 5 lakhs. Understand the facts. What happened? He purchased goods worth rupees 25 lakhs and sold 80% of such goods. So 20% was unsold. So if the cost of 100% goods was 25 lakhs, cost of 20% of the goods must have been 20% of 25 lakhs, that is 5 lakhs, right? Now, what happened is the market value of the remaining goods, that is the stock, was only 4 lakhs. Market value was 4 lakhs, but he valued the stock at rupees 5 lakhs. Was it correct? Absolutely not. So they are asking which principle was violated. Your options: money measurement, conservatism, cost, or periodicity. Yes? The businessman violated the principle of conservatism, or we can also say prudence, right? What he should have done? He should have valued the stock at cost or the market value, whichever is lower. But he valued it at the higher amount. He valued it at a cost of the goods, right? अगर मार्केट में वैल्यू कम हो गया है, then you should reduce the value of the asset. Okay? But he didn't do that. So the principle that was violated is conservatism. Okay? आगे बढ़ते हैं. Simple. Materiality principle is an exception to. Theory question, your options. Is it consistency? Materiality consistency का exception है? Or is it accounting period concept? Or is it cost concept? Or is it full disclosure principle? Which principle? Materiality is exception to which one? Logically, it should be full disclosure principle, right? Why full disclosure principle? Think about it. Materiality, we don't take into consideration each and every fact, right? We either hide or merge a few facts being immaterial. So as a result, we are not showing all, we are not showing the full detail. That's why materiality is exception to the full disclosure principle. All right. Coming now to the last MCQ for this session. What is it? Important. Mr. X purchased goods for rupees 40,000, of which 25% was for cash. That is 75% must have been credit purchase. He incurred expenses of rupees 10,000, of which 2,000 is still outstanding. So he must have paid 8,000 and 2,000 is still payable, right? And sold all the goods for rupees 80,000, of which 75% was on credit. So again, out of 80,000, 75% was on credit. That means that 25% must have been for cash. Now he calculated his profit as 2,000 rupees. They are asking which principle was violated. Okay, so we have to analyze it. The options given are these. Did he violate the principle of prudence, or accrual, or cost principle, or accounting period? Which one? So we have to analyze it. So let's see. We know that we have to compare the expenses with the income to reach at the amount of the profit. Now, one by one. If I write down the details of expenses, so first detail was of purchases. Purchases was 40,000, right? But more detail was provided. If I write down the details of it, then cash purchase was 25%, that is 10,000, and remaining credit purchase was 75%, that is 30,000, right? Then expenses were rupees 10,000, but again some details were provided. What details were provided? That the cash expenses was 8,000 and 2,000 was still outstanding, that is it was the credit expenses. Correct? Sales was also given to us, that was 80,000. Again, out of this 75% was on credit. So again, if we see the details, then 25%, that is 20,000, must have been for cash, and the credit sales must have been 60,000. So if we see now, you can see that income is of 80,000 and expenses totaling are rupees 50,000. So 80,000 minus 50,000, the profit should have been 30,000. But what is the profit reported? The profit reported is 2,000. How is that possible? How profit was 2,000? Just observe the facts carefully. How did they calculate that? Just observe this now. If you ignore the credit transactions and if you take into consideration only the cash transaction, just observe, you get profit as 2,000. See here, if I ignore the credit transaction and I take into consideration only the cash transaction, so 20,000 minus 18,000, the reported profit comes to 2,000. So that's what these guys did. They ignored the credit transaction and took into consideration only the cash transactions, right? So let's come back to the question, which principle was violated? So the principle violated was, yes, the principle violated was accrual, right? They should have taken into consideration the cash transactions as well as the credit transactions. But what they did is they ignored the credit transactions and took into consideration only the cash transactions, right? So the principle violated is accrual. All right. I hope these MCQs were quite beneficial to all of you. All the best.